Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend fueled by the fundamentals that at the moment we have in the gold market. Because as we know, gold performs very well when there is uncertainty around the world as a safe haven asset. And in fact, it has been rallying aggressively in recent months. What we can notice, in fact, is that it is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows, fueled by strong institutional buying. And we will be speaking about this institutional buying in just a few moments when we move to the commitment of traders analysis to see how institutions are positioning themselves on gold. But for now, what we have to keep in mind, as I was saying, is that the market is in a strong uptrend from a monthly standpoint, and that all this uptrend is coming after the breakout above a quite important historical structured zone, which is this one here, which has been acting as resistance for many years. And right now we had the break above the previous resistance became support, because as we know in the market, previous resistance, once it is broken to the upside, becomes support. And the market so far has been rejecting the level to the upside very aggressively with the development of this monthly uptrend with strong institutional buying that very soon we will investigate more. For now, let's keep all of this in mind and drop down on the weekly time frame. Here on the weekly, the situation is very clear as well. We had first the move to the upside, then the market entered this consolidation phase. We had the creation of this triangle formation or wedge, depending on how you want to call it. The main idea when you have a pattern like this is that the market is creating lower highs and higher lows at the same time. So you have an impulse, then the market starts moving horizontally, essentially creating this triangle formation, and then you have the breakout to the upside, which is in fact exactly what the market did. I'm sure you have seen this pattern already in the market in multiple occasions. And so far the market has been creating a series of weekly higher highs and higher lows. Right now, what we can notice is that the market, if we zoom in into the most recent price action, has been moving a bit more horizontally for quite few weeks. So what we are seeing here is a bit of consolidation from a weekly standpoint. What we can also notice is that we just had this candle right here. Now, when you see a candle like this with a very long wick and a green body, you usually expect the next candle to fill in that wick. And the reason for that is that if you see a candle like this on the weekly time frame, on the daily time frame, what you will actually have is an impulse and correction, in which the correction is exactly the wick here on the weekly time frame. And after an impulse and correction, you expect a continuation, because the continuation is simply how an uptrend is developed. You have a series of impulses and corrections creating higher highs and higher lows, which is the textbook definition of an uptrend. So here in the weekly, I'm not surprised that the market is pushing higher. You can see an example of this pattern also here. For example, you have a very similar candle. The next one fills in that wick. Now, let's go down on the daily time frame and see what we have. Now, from a daily perspective, I did speak about gold just a few days ago when the market was around this area. I explained all the reasons for which I was expecting this rejection to the upside. Then again, after this impulse and correction when the market was around here, I explained all the reasons for which I was expecting this continuation to the upside. And again, that is exactly what the market did. And by the way, I will link in description those two previous analyses, so you can go and check them out for more free education. But at the moment, what do we have? Well, before we go into more details here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's look at the data precisely for gold. Now, what we can see here is that institutions with the last reports have been massively increasing their net positions. We went from 161.2k net positions all the way back up to 187.9k net positions. So institutions have been increasing their longs and decreasing their shorts on gold. They added longs, 12,800 longs just with the last report, and closed 800 shorts, reaching 246,000 longs compared to only 59,000 shorts from an institutional perspective on gold, therefore making gold quite strong. So we have to keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. Now here on the daily, what we can notice? We can notice that the market is currently still below the resistance. In fact, from here, the previous rejection to the downside started. Again, here, the market found resistance at the level. At the moment, we're still below the zone. Until the market will remain below this resistance, it can easily continue lower. However, if the market manages to break above this zone, that is where things get very interesting, because a break above this level would make this previous resistance become support. And after the break on the retest of the previous resistance turns support, that is where we have even more probability to see continuation of institutional longing on gold, further increasing the probabilities of more bullish continuation above this level. So if we will see the break and retest, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me.
Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.